Hi, this is Michael again. I serve as a spokesperson for Nehemiah Reset. Today I wanted to explore the Bitcoin, stablecoins, and Treasuries dilemma. The financial landscape has seen a significant shift with the introduction of the Genius Act, which ties stablecoins to U.S. Treasuries. This act is a pivotal moment in the evolution of digital finance, marking a new era where traditional financial instruments intersect with cutting-edge cryptocurrency technologies. To understand the implications of this act, it is essential to delve into the interrelationships between Bitcoin, stablecoins, and treasuries, and explore why the United States chose this path. So, is the Genius Act really genius? The Genius Act, short for the Guiding and Establishing National Innovation for U.S. Stablecoins Act, was signed into law by President Donald Trump in July 2025. This act establishes a comprehensive regulatory framework for stablecoins, requiring 100% reserve backing with liquid assets such as U.S. dollars or short-term treasuries. Issuers are mandated to make monthly, public disclosures of the composition of these reserves, ensuring transparency and stability. What was Trump's motivation to do this? President Trump's decision to support and sign the Genius Act can be attributed to several strategic and economic factors. Firstly, the act aligns with Trump's broader vision of maintaining the U.S. dollar's dominance as the global reserve currency. By regulating stablecoins and tying them to U.S. treasuries, the act aims to bolster the demand for U.S. government debt, thereby reinforcing the dollar's hegemony in the global financial system. Secondly, the act is part of Trump's digital assets agenda, which includes promoting U.S. leadership in digital financial technology. The administration has been vocal about its support for digital assets, viewing them as a means to enhance the country's economic competitiveness and financial innovation. So, why not use gold as the hard asset to back the currency? The question of why the United States did not opt to back its currency with gold, as was the case under the Bretton Woods system, is multifaceted. Gold, while a traditional store of value, lacks the liquidity and flexibility required for modern financial transactions. Moreover, the supply of gold is limited and cannot be easily increased to meet growing economic demands. In contrast, U.S. Treasuries and stablecoins offer a more dynamic and adaptable financial tool, capable of responding to the evolving needs of the global economy. So, what is the value proposition of Bitcoin? Bitcoin, with its fixed supply of 21 million coins, has long been touted as a potential hard asset to back currencies. Its scarcity and decentralized nature make it an attractive option for those seeking an alternative to traditional fiat currencies. However, the question remains, how does Bitcoin's value hold up in the future? The limited supply of Bitcoin is a key factor in its value proposition. As the demand for Bitcoin increases, its scarcity drives up its price. This dynamic has been evident in Bitcoin's price trajectory over the years, with the cryptocurrency reaching new all-time highs. However, the future value of Bitcoin is also influenced by its adoption rate, regulatory environment, and technological developments. So, why is a new battle between Bitcoin versus gold? The U.S. decision to tie stablecoins to treasuries rather than Bitcoin or gold has sparked a debate on which asset will emerge as the dominant hard asset backing currencies. China and Russia have been increasingly using gold as a reserve asset, signaling a potential shift away from the U.S. dollar-dominated system. This geopolitical maneuvering adds another layer of complexity to the ongoing battle between Bitcoin and gold. The financial strategies of major economies, including the U.S., China, and Russia, reflect a broader geopolitical struggle for economic dominance. The U.S. approach, as embodied in the Genius Act, seeks to leverage the strengths of both traditional and digital financial instruments to maintain its global financial influence. By tying stablecoins to treasuries, the U.S. aims to create a stable and trustworthy digital asset that can compete with other global currencies, including China's digital yuan. This strategy not only supports the U.S. dollar but also opens up new avenues for financial innovation and inclusion. China and Russia's focus on gold as a reserve asset is a strategic move to diversify away from the US dollar and reduce their exposure to US financial sanctions. Gold, with its historical role as a safe haven asset, provides a stable and recognized store of value that is less susceptible to geopolitical risks. As the global financial landscape continues to evolve, the battle between Bitcoin, stablecoins, and gold will likely intensify. The outcome of this competition will depend on various factors, including technological advancements, regulatory frameworks, and geopolitical dynamics. The rapid pace of technological innovation in the financial sector favors digital assets like Bitcoin and stablecoins. These assets offer greater efficiency, accessibility, and programmability compared to traditional financial instruments. As blockchain technology matures, it could further enhance the appeal of digital assets. In the digital age, the stability and security of cryptocurrencies like Bitcoin and stablecoins are often taken for granted. However, major catastrophes such as wars, electrical fires, or other large-scale disasters can have profound and unpredictable effects on these markets. We will explore how these large-scale catastrophes may impact these markets. Catastrophes can lead to significant market volatility. For instance, during the onset of the COVID-19 pandemic, Bitcoin experienced extreme price fluctuations as investors reacted to the global uncertainty. Similarly, wars or natural disasters can trigger panic selling or buying, causing rapid price swings. Stablecoins, designed to maintain a stable value, may also experience volatility if their underlying assets or reserve mechanisms are affected. Electrical fires or other disasters can disrupt the physical infrastructure that supports cryptocurrency markets. Data centers, exchanges, and mining operations rely on consistent power and network connectivity. A major disruption could lead to downtime, affecting trading, transactions, and even the ability to access one's digital assets. Catastrophes can erode trust in financial systems, including cryptocurrencies. If a disaster leads to significant losses or disruptions, it may undermine confidence in the stability and security of Bitcoin and stablecoins. This loss of trust could result in a sell-off, further impacting market prices. The question of whether you can lose your digital assets due to a system crash or record loss is complex. Here are some key considerations. 1. Decentralized nature of blockchain. Bitcoin and many other cryptocurrencies operate on decentralized blockchain networks. This means that the record of ownership is distributed across numerous nodes worldwide. Even if a significant portion of the network goes offline, the blockchain remains intact. However, accessing your assets during a widespread outage can be challenging. 2. Private keys and wallets. Your ability to access your digital assets depends on having your private keys. If you store your keys securely offline, cold storage, you may be able to regain access to your assets once the network stabilizes. However, if your keys are stored on a device or service that is destroyed or becomes inaccessible, you could lose access to your assets. 3. Exchange and custodial services. Many users rely on exchanges or custodial services to manage their cryptocurrencies. During a catastrophe, these services may experience downtime or even collapse. If you do not have control over your private keys, you may be at the mercy of these services to regain access to your assets. 4. Backup and recovery. Having robust backup and recovery plans is crucial. This includes maintaining multiple copies of your private keys, using hardware wallets, and ensuring you have access to your recovery phrases. Regularly testing your recovery procedures can help ensure you can regain access to your assets in the event of a disaster. While the decentralized nature of blockchain technology provides a level of resilience, major catastrophes can still impact the Bitcoin and stablecoin markets significantly. To protect your digital assets, it is essential to understand the risks and implement robust security and backup measures. By doing so, you can mitigate the potential for loss and ensure that your assets remain accessible even in the face of unforeseen events. The regulatory environment will play a crucial role in determining the future of these assets. The Genius Act represents a significant step in providing a clear and supportive regulatory framework for stablecoins in the U.S. Similar regulatory clarity in other jurisdictions could accelerate the adoption of digital assets. The geopolitical tensions between the U.S. and other major economies, such as China and Russia, will continue to influence the global financial order. The strategic use of financial instruments, including stablecoins, treasuries, and gold, will be a key component of these nations' economic policies. In conclusion, the Genius Act marks a significant milestone in the integration of digital finance with traditional financial systems. By tying stablecoins to U.S. treasuries, the Act aims to reinforce the dollar's global dominance while embracing the potential of digital assets. As the world watches the unfolding battle between Bitcoin, stablecoins, and gold, the future of financial dominance hangs in the balance. The outcome will be shaped by a complex interplay of technological innovation, regulatory frameworks, and geopolitical strategies, with each nation vying to secure its place in the new financial order. I hope this video gives you some idea of the issues that are being fought in our financial system. The battle among China, Russia, the BRICS, and the United States will be an ongoing battle for years to come. With so many of the Western nations facing severe financial issues, the winner of this financial battle will ultimately control the financial system and which system survives. To learn more about other cultural and biblical issues facing us, visit our website at nehemiahreset.org or our rumble.com account. Thanks for watching and have a great day. Are you looking for a limitless supply of insightful reads to expand your mind and transform your life? Look no further than Nehemiah Reset's ebook library, where knowledge meets inspiration at nehemiahreset.org/ebook. Go there today to discover a wealth of valuable resources to help you on your personal and professional journey to build a biblical worldview. Learn more about the Bible and how culture is impacting your worldview. Again, that the ebook library is located at nehemiahreset.org/ebook. Hope to see you soon. My name is Mark. I am one of the spokespersons for Nehemiah Reset. The prior video was sponsored by Nehemiah Reset, a 501c3. Our mission is to assist Christians in developing a biblical worldview as it pertains to relevant cultural and biblical issues. We seek to inform Christ's followers, equip them, and mobilize them into action to vote for their biblical values and to actively engage in our culture. We are also committed to help Christians and non-believers to develop a better biblical view. Nehemiah Reset produces videos and ebooks to assist members of the church in developing a biblical worldview when it comes to cultural issues. We produce videos on key topics like public school indoctrination, the woke agenda, sex education, equity and inclusion, climate change, immigration, religious freedom, and much, much more. To learn more about Nehemiah Reset or to watch our latest videos, go to our website at nehemiahreset.org or our rumble.com channel. We produce 2 to 3 videos every week. To get a weekly list of our latest videos, sign up for our weekly newsletter by going to nehemiahreset.org/email and subscribe. You can support our website by liking our videos, subscribing to our channels, or helping us reach more people through tax-exempt donations. Thanks for your help in growing God's kingdom and bringing more people to Christ. Thank you for your support and help. Come back again soon. Have a great day.